So what if the single most dangerous thing you do every day could actually become the safest? Well, that's exactly what we're going to dig into today. We're exploring the absolutely massive multi-trillion-dollar race to build the future of transportation, and we're going to break down the investment thesis behind the robotaxi revolution. Okay, first things first. To really understand the opportunity here, you have to get your head around the sheer scale of the problem we're trying to solve. I mean, our current transportation system, it isn't just an inconvenience. It's a massive, quantifiable failure. Just look at this number. 1.3 million. That is how many people are killed in traffic accidents around the world every single year. You know, the World Health Organization doesn't call that an accident statistic, they call it a public health crisis. And here's the why. A staggering 94% of all car crashes have one thing in common: us, human error. Whether it's distraction, fatigue, or impairment, these are the fundamental and frankly tragic flaws that are just baked right into the system we use every day. And you know, beyond the terrible safety crisis, there's also this staggering economic cost. The average American spends 420 hours a year just sitting behind the wheel. Think about that. That's the same as 10 full 40-hour work weeks, just gone. It's lost productivity, it's wasted time, and it all adds up to a massive drain on our economy. All right, so that's the problem. It's a big one. But what about the solution? This is where autonomous mobility really enters the picture. And it's promising a future that is fundamentally safer, way more productive, and a whole lot more accessible for everyone. And listen, this isn't some far-off science fiction dream. The early data is incredibly promising. In the cities where it's already operating, Waymo's autonomous driver has shown a 91% reduction in crashes that involve serious injury when you compare it to humans. That one statistic, that is the absolute core of the safety promise. But the impact, it goes so much deeper than just safety. This quote from a Waymo writer really gets to the heart of it. For millions of people who have mobility limitations, you know, the elderly, people with disabilities, this technology represents a profound, life-changing leap in their independence and their freedom. And of course, the financial scale of this whole shift is just mind-boggling. As you can see here, the robotaxi fleets themselves are actually just a small piece of the pie. The real prize might be the software, the advanced driver assistance systems. That market is projected to be enormous. All told, the total market could get close to $7 trillion. We're talking about a major economic transformation. So, with a prize that big, you can bet the competition is absolutely fierce. But this isn't just a simple race to the finish line. Different companies are making fundamentally different, high-stakes bets on exactly how to build this future. Really, the entire industry is split by this one central philosophical divide. On one side, you have Waymo and their sensor fusion bet. They use a whole suite of hardware, LiDAR, which is kind of like radar but with lasers, plus regular radar and cameras to build the super accurate, redundant map of the world. Then on the other side, you've got Tesla's vision-only bet. They're trying to solve general autonomy with just cameras and incredibly powerful AI. It's a real clash between methodical, provable safety and disruptive, fast-moving scalability. And that brings us to the really crucial question here, because the winner of this race, it's not just going to be decided by which technology is better on paper. It's going to be decided by which one regulators, and maybe more importantly, which one you and I and the rest of the public ultimately decide to trust with our lives. So if you look at the race, there are really three distinct types of competitors. You've got the methodical leader, Waymo, building everything from the ground up, slow and steady. Then you have the disruptive incumbent, Tesla, trying to basically turn its giant existing fleet of cars into a network. And then you have the picks and shovels players, like NVIDIA, who plan to profit no matter who wins by supplying the crucial hardware, the brains, to everybody. Okay, so we've got the technology, we've got the players, but how does this revolution actually make any money? Well, the entire business case rests on one simple idea: fundamentally changing the cost of getting around. This chart right here, this tells the entire economic story in one picture. At scale, the cost per mile for a robotaxi is projected to drop below the cost of even owning your own car. That is the critical tipping point. That's the moment where, for millions of people, it could actually become financially irrational to own a personal vehicle anymore. But hold on. Here's the tension in the whole model. Getting to that super low per mile cost requires a staggering amount of money up front for the cars and the tech. So how are these companies setting themselves up to actually capture all that future profit? Well, there are basically three main models being tested. First, you've got Waymo's approach: own the entire fleet. This gives them full control, but man, does it require a massive amount of capital. Then there's Tesla's vision of a decentralized network. It's capital light, it scales fast, but you lose control over quality. And finally, you have the tech licensors, like Intel's Mobileye. They're avoiding building cars entirely and just selling their autonomous systems to other automakers. It's a high-margin software business. Each one is a different bet on how to balance cost, control, and scale. Now, as exciting as all of this is, let's be real. The path forward is anything but guaranteed. There are some really formidable obstacles that could slow down or maybe even derail this entire revolution. Yeah, success really depends on solving three huge hurdles. First is the tech itself, cracking what's called the long tail. That just means teaching the AI how to handle the millions of bizarre, unpredictable things, like a flock of geese suddenly landing in the road, that happen rarely but have to be navigated perfectly. Second is regulatory. It's a confusing patchwork of laws with no clear rules on who's at fault when something goes wrong. And maybe most importantly, the societal challenge, winning our trust, which, as we know, can be shattered by a single high-profile accident. So, given all these incredible opportunities and these very real risks, the question becomes, how can an investor think about this space in a structured way? Let's break down the investment thesis. The source material really suggests a tiered approach. The lowest risk strategy is that picks and shovels play, investing in the enablers like NVIDIA, who supply parts to the whole industry. A medium risk play would be the incumbent automakers like Mercedes, who are already carving out profitable niches with the tech they have today. And then you have the highest risk, but also the highest potential reward, making those big, high-variance bets on who you think the ultimate winner will be, whether it's the methodical Waymo or the disruptive Tesla. Which brings us to our final thought. At the end of the day, this isn't just a story about cars. It's a story about our relationship with technology and trust. As AI starts proving it can handle a task as complex and as uniquely human as driving, it really begs the question, what's going to be the last skill that we as humans refuse to hand over?